Welcome back. Now, gold's safe haven appeal keeps shining amid geopolitical and economic uncertainty. According to the World Gold Council's full-year gold demand trends report, total gold demand hit a new all-time high in 2025, boosted by global investment demand. Now, Krish Gopaul is a senior analyst for Europe and Middle East and Europe and Africa at the World Gold Council. He joins us with greater perspective on what the gold demand trends suggest about the yellow metal. Hi, Krish. Good to chat to you. Look, we didn't expect this to happen, going way north of $5,300. A lot of Johnny-come-latelys are saying, have we missed the boat? Have they missed the boat? Because this just looks like it's going to continue to skyrocket.
Well, I certainly think there's been a lot of interest in gold recently, and that's reflected in what we've seen in the gold price, but particularly in demand. So, as you mentioned, we saw record levels of demand last year, and that was predominantly led by the investment side of the market. So that's gold bars and coins, that's gold ETFs. Again, that price run up that we saw last year, that 67% increase over the year, 53 all-time highs, certainly was eye-catching. So it's understandable how this generated its own momentum. And then we've continued to see that into this year. Obviously, we don't forecast the gold price. It's difficult to see what may happen in the future. But certainly we can see that given the price environment that we're in, the economic and geopolitical environment we're in, there is still good support for gold investment at the moment.
Yeah. Krish, how has this affected different sectors? I'm thinking about jewelry. I mean, I would think obviously the demand has been there because all of a sudden this is an investment.
Yeah, absolutely. I mean, look, it's not surprising that the consumer elements of the market were a spot of weakness that we saw last year. I mean, annual jewelry declined to about 1,500 tons, and that was the lowest for 5 years. And again, the story there was really one of affordability. I mean, the higher price meant that the consumers were buying, in volume terms, less gold. But actually, if you consider it in value terms, we saw a record amount of money being spent on gold, 172 billion, and that was 18% up year on year. So that really still underscores consumers' willingness to buy gold jewelry despite the rapid rally in the gold price that we saw.
Yeah. And then talking central banks, I mean, I was looking at the report, their demand is also up as well. I think that would be quite obvious though, because that's how they operate.
Yeah, I mean, look, we saw another year of very, very healthy central bank buying 863 tons. That was, a little below what we'd seen in the previous 3 years, but nonetheless still incredibly healthy and much higher than we'd seen before 2022. And again, when we speak to central banks, the reasons that they cite for holding gold, its performance in times of crisis, ability to hedge against inflation, lack of counterparty risk, all of that is still relevant, very relevant now compared to how it has been in the past few years.
Yeah, I think there may be a bit of concern though, is if you're investing in gold now and this bubble bursts, because as you said, this is as a result of geopolitical conditions throughout the year. You could see a new American president in a couple of years' time, you will. You could see all sorts of things changing geopolitically. Could you be caught out with this bubble deflating?
Well, I certainly think you're right to pinpoint the fact that we are in very uncertain times. And I think, again, that's been reflected in what we've seen in the level of demand. The fact that investors, markets are really uncertain about what's happening at the moment. And then that will obviously have an impact going forward. And again, that itself, that heightened level of uncertainty, being compounded year after year, is creating a really supportive environment for gold. And we've seen that, as I said, in the demand last year. And we're starting to see it in what little data points we have so far this year too.
Yeah, so it continues as well. I can't help but feel for those who bought Kruger Rands a few years ago, wanted to get rid of them, couldn't. I see you smiling. And now it's a good thing to have those Kruger Rands. Well,
it really shows that, there is value as kind of a hedge, a safe haven, that, in certain times, gold really will shine. And we have seen that over the last couple of years, gold really has shone. Going back to my point about uncertainty, it really does underscore the fact that in times like this, there are understandably concerns, not just right now, but going forward. And investors across the world will be looking for assets that will help protect their value. And so that has really been a real boon to gold in particular.
What have we seen in tonnage with regards to those figures, with gold being sold, coming from miners, producing out? What have you seen? I mean, these figures must be climbing astronomically.
In terms of mine production, I mean, it's a little slower to respond to the gold price increase. I mean, the rapid pace of the gold increase has caught, I think, many off guard. And mine production is obviously a really intensive kind of undertaking, and these things can't be changed. But we did see, based on the estimates that we have at the moment, it does look like we did see record mine production last year. But we think that that's likely to plateau, if anything, rather than rapidly increase in the response to the gold price.
Yeah. Are you seeing miners, though, increasing production, which could be quite worrying if you're starting new operations? Obviously, you want to get the gold out now as soon as you can to capitalize on this $5,300 level. But you could get to the point where you've created these new operations and later on down the line, you've got a problem.
Yeah, well, I mean, look, there are ways in which the industry manages, the gold price and their exposure to it. I would think that it's likely that mine production and the companies who are involved in digging the gold out of the ground have made ample protection in order to account for the fact that the gold price has gone up so much. But that's true of much of the market, I would say, not just on the supply side, but on the demand side too. I think investors obviously are watching what's happening with the gold price and kind of positioning themselves accordingly.
Yeah, I sort of talk about that demand side. Demand side, where are you seeing the most demand for gold? What's raising your eyebrows? You're thinking, okay, that's where it's going. That's where it's needed.
Yeah, as we touched upon, the standout story last year was investment. That really is the big driver of gold at the moment. Certainly, we saw a huge amount of interest in gold ETFs in particular last year, 801 tons of demand. And again, that was globally diverse. It wasn't just in a particular market like North America or Europe. We also saw big growth in Asia too. And similar in bar and coin, smaller retail investors were clamoring for gold across different markets in the world. Again, led by that kind of uncertainty and the want to protect themselves kind of against what may come ahead. So really, I think investment was the big picture, supported by central bank buying, obviously being very, very healthy. Those were the two key stories that we saw in demand last year.
Yeah, well, interesting stuff. Krish, thank you so much. Good to chat to you. I look forward to catching up with you again soon as the gold story continues. Thank you so much. That was Krish Gopaul, Senior Analyst for Europe, the Middle East and Africa at the World Gold Council. Now, before we say goodbye, let's just check in on the top 40 and looking at what we have at the moment. There's so many shares today that are doing well. Now, the all share itself, 126,413 points, up just over 1% at the moment. The JSE top 40 following, of course, that trend as well, up 1.2% at the moment. The rand to the dollar now 15.76. And to be honest with you, it's been tracking that since this morning in big anticipation of what's going to happen with our MPC this afternoon. Chatting to various economists, it seems to be some sort of like a 70-30 split in favor of the Reserve Bank keeping the repo rate unchanged. And you would have seen what happened overnight as well with the US keeping their rate unchanged. That's the US Fed. And Jerome Powell has been very verbal about this, saying he needs to watch inflation. The big question happens now when his successor comes in. Will he then drop those rates in line with what Donald Trump says? That could be rather disastrous, I think, for the dollar. We'll have to wait and see what happens there. Some of the other movers and shakers today. GRP at the moment up 3.61%. Old Mutual doing really well, up 3.43%. So these are some of the big top 40s. Outsurance trading well, 3.43%. So you can see a major slide in favor of that sector. The BHP group gaining over 3, South 32, 2.89. Some of the gold miners, though, and it's interesting, DRD Gold losing about 3, but over the past, I think, a couple of weeks, you've seen DRD go up with Gold Fields as well. Some of the others, but some of the other losers today, you would have heard this with Jason Woolies losing 3.55%. Their production, of course, they say in the next half will be up, but there are concerns about what's been happening in Australia. And the markets today are just not convinced about this. AdviTech also losing 2.58%, and then also some of the others as well losing quite a bit. But these are some of the big ones. But looking at those miners once again, Sibanye today up 1.9%, and that gold price continues to go up and to go up. Rhine Minerals as well up 4.7%. If you're looking at some of the others, DRD Gold, like I said, down 3.1%, but that's due to individuals' pressures over there. So those are some of the big takers at the moment. We'll see this afternoon what happens with Lesotho Kganyago. Gold at the moment, sure, it's trading at $5,513, up 2.18%. And you can see exactly what's happened there. Gold is continuing to shoot the lights out. We've had Keir Starmer, he's talking to China at the moment, and then Canada as well. They've also been talking to China. So that's the overall picture.